Okay, let's dive into Rivian here for a bit and see if there's any opportunity in Rivian stock.
Day after reporting results in that production guide, our Phil LeBeau talked with the CEO this morning on Squawk and joins us with more. Hi again, Phil.
Hey, Carl, when you take a look at shares of Rivian, the stock down now 94% compared to its all-time high of $172, which happened shortly after it went public in November of 2021.
Down to 11. Oh, it's down 11. That might be a sign. Oh, my gosh. I didn't know it was down to 11 today.
And take a look at what's really happened here. This is a market where luxury EVs, and that's what Rivian is. It's a luxury-priced EV. It's just not selling right now. Their loss per vehicle in the fourth quarter, 43,372. On top of that, their guidance for production this year came out to 57,000 vehicles. And that's well below where the street was expecting. The street was expecting production guide of close to 81,000. That's incorrect, that graphic there. The production guide is not 66,000. It's 57,000. And as you take a look at their annual deliveries, only building 57,000 means they're not going to be getting close to the mid-60s in terms of deliveries this year. They delivered 51,000 last year. Most are going to have to bring down their delivery estimates. Here's CEO RJ Scaringe talking with us this morning about the changes they're putting in place to lower costs.
Well, here's the deal with Rivian, okay? First off, let me say this, okay? I like Rivian. If Tesla didn't exist, I would probably own a Rivian or two. But there's a problem, a huge problem for Rivian. There's a lot of problems, but this is a huge problem. Tesla does exist. And so therefore, Tesla's ridiculously competitive with pricing, and they're relentless. And so a lot of people look out there and they say, okay, maybe I'll get a Rivian, or maybe I'll get a Model Y or a Model X. And then they look at kind of the price of the Rivian, SUV, they look at a Model Y, Model X, and they're kind of like, I don't know. Now, Tesla's getting in the truck game. Cybertruck, the most talked about hyped vehicle in the history of mankind. It's going to put a huge dent into Rivian's truck business, at least in the short term, right? In the long term, it could actually help Rivian, but in the short term, there's no doubt it's going to hurt, right? And so that's the trouble for Rivian right now, right? And just ask Lucid about trying to compete with Tesla, right? Lucid can't even get off the ground. I mean, it's a joke. Lucid's talking about 9,000 vehicles produced in 2024, that's like literally nothing. Like Tesla almost produces that much in a day. You got to be flipping my flapjacks, right? But Lucid tries to compete with Tesla, and Tesla has two very competitive cars in the market, the Model S and the Model 3. And good luck trying to compete against those.
As we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000.
By the way, shutting down the plant for several weeks in the second quarter, that's been known about for some time. That was not a surprise. That's part of what they're doing in Normal, Illinois to adjust production. Remember, they also make the electric delivery van that is used by Amazon. That's part of the adjustment in production. They will be unveiling the next generation model, the R2, on March 7th. But keep in mind, that doesn't go into production until the Georgia plant opens up in 2026. So we're a long ways from that mass market next generation model. And Carl, their market cap is now a little over $10 billion. Remember after the IPO back in 21, market cap was something like $160 billion.
Yep.
Higher market cap than GM and Ford together. And a lot of people at that time said, slow down here. These guys are a long ways from getting to profitability. Look how things have changed 2.5 years later.
Yeah, I think my guess is with Rivian and Lucid, I think there's a couple of possibilities. One is bankruptcy for both those companies. I think another possibility is acquisition, right? We do know that the traditional players in the auto market have had incredible trouble launching into the EV market, right? So it could make a lot of sense to pick up a Rivian at some point later this year or a Lucid for a very cheap price. You get a brand there that is dedicated to EVs, that is focused on building an EV brand versus, let's say, Ford, that everybody thinks about as internal combustion engine. People are like, why would I buy a Ford electric vehicle? Like what, right? Or why would I buy a Chevy electric vehicle? Like what? Like why would I just buy an internal combustion engine if I'm going to go that route, right? So you need to have brands that are specific in EVs, right? Which obviously Lucid is and Rivian is. And obviously these companies are going to be trading at very joke prices this year, right? I mean, look at how bad the pricing is. And this is in a pretty risk-on market. Is this the most risk-on market I've seen? No, definitely not. That was 2020, 2021, right? But I got to say, this is a pretty risk-on market. And so for these stocks to be at $3 and $11 in this type of market, what happens if, let's say later this year, we have a downtrending market? A Rivian could easily be $7, $5. A Lucid could easily be $1 or $2, right? And so that's where then these companies start to say, gosh, we're not even going to be able to raise capital if we need to raise capital because our stock price is so low. And so that's where maybe these other guys come in and say, you know what, we'll come in, pick up these companies. Yeah, they're losing a ton right now, but we'll build them out over the coming years. And it's better than trying to build our brands. We'll build that brand in the EV space and you know, compete there. And then we'll keep our other brands more focused on internal combustion engine vehicle business, which is where they make their big, huge profits, right? So I think that could make a lot of sense. I think that could make a lot of sense in my personal opinion. I think if you're going to pick up one of those two companies, though, I think Rivian's definitely the more interesting acquisition target than a Lucid. Now let's hear the whole interview by the CEO, and let me see if I change my opinion.
Deep in the red this morning, this after the company reported fourth quarter results, and Phil LeBeau joins us now with the company's CEO. Phil.
Thank you, Andrew. Let's bring in RJ Scaringe. RJ, it was a rough report for you guys. Let's be blunt. Plus, you announced 10% of your salaried workforce is going to be laid off as you guys are cutting your costs. I'm curious, in a general sense, how much has the EV market slowed down in the last 3 months?
Yeah, I mean, we've seen historically high interest rates, and we've, along with a lot of the geopolitical uncertainty, particularly for higher-priced products, you know, in the premium segment, we're seeing the effect of interest rates, the effect of uncertainty, really impact how people are thinking about purchase decisions. And it led us to accelerating the launch of our standard pack to make sure that we have our full portfolio of products available.
So when you look at where the market is right now, your guidance for building 57,000 vehicles this year is well below what the street was expecting at 81,000. Where's the disconnect? Did the market, I mean, we've been talking about the market slowing down. Why did analysts miss it by such a wide margin?
Well, our R1T, R1S products, these are our flagship products. They have been performing really well relative to the market. So we have the best-selling electric vehicle with a price point of over $70,000. And so, as I said, the impact of interest rates is impacting the whole segment, the whole call it premium segment. But relative to the rest, we still have the best-selling product in the market. And so, as we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000. But as I said, as far as premium products go, we do have the best-selling EV in the United States today.
Let's talk about some numbers. You lost $43,000, roughly speaking, per vehicle that you built in the fourth quarter, about a $12,000 increase in the amount lost compared to the third quarter. And I know you outlined some of the changes that you're making in terms of cutting your costs. Mm-hmm. Is it realistic to think that you can get back or get to some type of a profit, positive profit margin in the fourth quarter, given the losses where they're at right now?
Well, if we look at the fourth quarter of 2022 and compare it to the fourth quarter of 2023, we reduced our overall cost per vehicle by about $81,000. And that's a combination of better operation, more efficient operations within the plant and, really improving some of the fixed cost absorption within the facility due to the ramp up. But the other big element here is continued progress on our material cost. And that's all the components that go into the vehicle. And so the shutdown that I just referred to that we're going to be making these pretty significant changes across the vehicle in terms of cost structure, in terms of componentry, that is going to be a huge enabler for us to get to positive margin. And as we talked about in our earnings call yesterday, we still have confidence and want to be very clear that the fourth quarter of this year, we will be positive gross margin.
Do you have confidence you have enough capital to make it to the R2 and production in 26?
We're incredibly excited about R2. I mean, when I look at the brand strength that we've established with our launch products, the R1T, the R1S, and just how well consumers have responded. Consumer Reports does an annual brand survey, and Rivian came out as the #1 rated brand with by far the highest rate of repurchase, meaning if you're going to buy a vehicle again, would you buy Rivian again? And by a significant degree, relative to all other brands, Rivian came in the number one spot. And so as we think about taking that brand position and now applying it into a smaller footprint vehicle with a meaningfully lower price point, to be able to translate not only some of the brand excitement, but importantly, the significant market share that we've built with our flagship product, we're incredibly excited. So with that said, the organization is heads down focused on delivering to that. The product itself is coming together beautifully. We're going to be unveiling it on March 7th. And that
but
really
real quick,
represents...
RJ, only because RJ, we're running up against a break. I don't mean to belabor this. Understand the strength of the brand and where you guys are at. But to get to my question, are you confident you have the capital needed to get to R2 production, or do you think there's a possibility of a capital raise between now and then?
What we've said is we're very confident in the capital we have supporting operations through the end of 2025. There's a variety of ways we intend to ensure we can launch R2. So there's certainly opportunities to look at the capital markets, but we're also driving efficiency into everything that we do. And the emphasis on driving cost efficiency into operations, into how we deploy capital from a CapEx point of view. And of course, as I said, on the COGS side, on the gross margin side is the highest focus within the whole business.
So right there, he basically opened the door to capital raise, right? And that's why that stock likely went from then 12 something to $11, right? Let's check where the stock price is right now. Let's check where it is right now. I'm quite interested. Yeah, 11.30, right? But yeah, and so for a company like Rivian, man, they're just in a really, really tough spot. Really tough spot because, I mean, they're putting up these really bad numbers in a great employment market right now, right? With unemployment in the 3s. It's like, what if that number was a lot higher than this? I mean, gosh, where would that company be in that situation? So just not ideal for that, okay? Alrighty, guys. So clown market has 5 characteristics, okay? The first one is everyone making money in that market? And I think that's a very important thing. You can't be in a clown market if like half the people are making money, half the people are losing money. It seems like that's the type of market where it's just like, geez, man, it seems like everybody's making money in this market, right? Second thing is you've got to have mass amounts of retail investors wanting in. We'll discuss that. Third thing is it's got to seem like every stock is going up. And it's like, oh my gosh, is there anything that's not going up right now, right? We'll discuss that. Fourth thing is the crappier the stock, the more it outperforms. The lower quality the company is, the more it outperforms the market and other stocks in general, and especially, let's call it, just better companies in general, okay? And the fifth thing you need to have a clown market is it needs to be a market that is focused on revenues over profits, okay? That's a clown market. And if, the 2 best examples of a clown market in recent memory was certainly the tech bubble, which was really 98, 99, and then it started, boom in 2000. And then 2020, obviously, into the beginning parts of 2021. That was a clown market as well. Okay, so those are the 2 examples really in the past 25 years I could give you of clown markets, right? So let's dive in here. Let's go deep, okay? First thing is everybody making money? Well, it seems like if you're an investor in the market, you should be making a lot of money. I mean, it's almost become customary where I wake up and I feel like I should make like tens of thousands of dollars a day, right? There's a public account here today. It was up $59,872. And really, it seems like for the past 12 to 18 months, it seems like the account just goes higher and higher and higher for basically the last 12 to 18 months, right? And it has a few dips here and there, but ultimately the trend is higher and higher and higher, right? If I look out at, let's say, my private group, there's over 1,000 members in my private group, right? I don't know anybody in there that hasn't made money in the past 12 to 18 months, and their account's not much higher today than it was 12 to 18 months ago. If they exist, then they certainly haven't learned a dang thing from me. I think every single person in my private group is in a much better place with their portfolio now than it was 12 months ago, okay? So definitely I would say we're in a market where it seems like everybody's making money that's participating in the market right now, okay? So that I'll say, other than maybe the short sellers, maybe they're not making too much, but it seems like just about everybody's making money in this market. So check, we have one of the 5 for clown market. Next up here, mass amounts of retail investors wanting in. Are we at that stage yet? Well, here's some numbers off my channel, which, by the way, keep in mind, my YouTube channels are not necessarily the best for attracting new investors. Sometimes some new investors find my videos, but a lot of times I attract, a lot of you guys that are watching this video right now, a lot of you guys have been in the market for many years now at this point in time, right? But nonetheless, I think I'm a good gauge for seeing a lot of retail investors trying to get involved in the market. In the past 7 days, the main channel has attracted 472 subscribers. Not too crazy. The reaction channel has attracted 511 new subscribers in the past 7 days. Okay, that's less than 100 subscribers a day, right? And the clips channel has attracted 80 new subscribers in the past 7 days. So to put those numbers into reference, okay, you want to get some shocking data. In 2020, 2021, my main channel was attracting 500 to 2,000 new subscribers every day. Every day, okay? So that shows you the levels of what a real clown market is versus, what we have going on right now when it comes to the retail side, right? The retail appetite is just not there the way it was, right? Now, if you want to take it one step further and say, okay, let's take it beyond you, Jeremy, let's take it bigger than that. Okay, let's take it bigger than that. Let's take it to the biggest. Let's take it to Robinhood. There's no app that attracts more new stock market investors than Robinhood, right? They're the kings. So in terms of Robinhood, in terms of their funded customer growth, it's only up about 2%. Year over year, 2%, 500,000 roughly. And they've added, let's call it 100,000 customers. If we go month versus month there, December versus January. So none of those numbers scream, oh my gosh, it seems like everybody wants in this market. No, it's just not that sort of market right now. So for that one, we don't have that. We don't have mass amounts of retail investors wanting in this market. If we did, I could tell you my subscriber numbers would be crazy right now. Robinhood's numbers would be crazy right now. It would just be, a lot of people, everybody and their grandma wanting to get in this market. We don't have that right now, okay? Third thing up here is you have to have a situation where it seems like every stock is going up, right? So I just pulled up a bunch of, very famous companies just to illustrate, is this a market where all the stocks are going up? This is just a 1 year chart for these stocks, right? You have a Meta, Elf, Amazon, Chipotle, right? Famous stocks. Elf's the least famous of those bunch, but the other three are certainly very famous stocks. And then, I just pulled up some other super famous stocks: Tesla, Starbucks, Nike, PayPal. PayPal's down 22% in the past year. Nike's down 12% in the past year. Starbucks is down 8% in the past year. Tesla's down about 2 percentage points in the past year, right? And then you got those stocks that are great. So the reality is this is certainly no market where it seems like everything's going up. If we were in a market where everything was going up, Tesla would be up very nicely over the past year. Starbucks would be up huge over the past year. Nike, PayPal, all these great companies would be up tremendously over the past year. So we're not in that sort of market right now. So once again, we do not have a market where it seems like everything's going up. There's some very big, powerful companies that are going up, as in Meta, as in NVIDIA, AMD, and a few others. But the reality is it is certainly no market where it seems like everything going up. You could look at the Russell 2000, for instance. The Russell 2000 is doing what? A whole lot of nothing. Check out the Russell in the past year. Put me to sleep. That's the Russell, right? So it's just not there. Next one up here, the crappier the stock, the more it outperforms. That's when you're in a clown market, right? Well, if we dive in here a bit, what happened to Rivian today, right? Rivian would be put into the crappy stock category, certainly, right? Loses ridiculous sums of money and their business is just not impressive at all. And, that stock was down 25.6% here today, right? Lucid, horrible quality company. Could be a company that ends up going bankrupt over time or has to sell for a really low valuation. Same with Rivian. We'll see. That stock was down nearly 17 percentage points here today. This shows you the divergence between quality, profitable beast companies and let's call it low quality lottery ticket stocks, right? And a couple of these, I put a couple of my stocks in there because I own a couple lottery ticket type stocks, right? Low quality. Fubo and the Planet. Those are two perfect examples. It's like, man, if they can get their stuff together, those are 10x opportunities. If they can't, they may be bankruptcy candidates, in a year or a few years from now, right?